And good morning. Hey guys, ladies. Hope you guys had a great evening. Looks like pretty much status quo here this morning. Oh, it's hot here too. That stuff. I don't know if it's any more or less so than Orlando, but it's muggy. But paradise is on the way. We know that. Another couple of months. Everyone from up north flows down here to take advantage of the fabulous weather. Yeah. All right. So spiders are down here a little bit this morning, which S&Ps were actually down a little a few minutes ago, and now they're up. So must be some adjustment going on there. And spiders are down here a bit because the S&Ps, they did dip, and now they're right back up there. So whatever. We just got a little consolidation, wide range bar, new all-time high, nice, beautiful reversal here. Remember earlier in the week, we were looking for this to go up, and we got the down day that was like, oh my God, is it going to go down to the prior swing low? And next day, that 180 reversal with the little tail under the low of the red bar, which just screams, come and get the money. It's in an uptrend. It's at the 20. It's a consolidation. The red bar was the correction. It took out the low and turned back up again. It just tore the eyeballs out of the bears and left them for dead at the bottom of the bottoming tail bar. How's that sound? I like it. And a little consolidation and pop. So now, same routine. Any correction, we want to see it stay in the upper half, ideally in the upper quarter. We definitely don't want to see it retracing down here. That wouldn't break the trend at all, right? And now we have, on that third day, and we don't have. So let's talk a little bit about the nuances of master trader technical strategies and some of the past education for those of you that were around for advanced technical strategies. I made an adjustment from that course to MTS to where explaining different pivot levels, where I don't get into the levels in MTS. I thought it was too much of a brain buster as far as understanding, but rather to just decide to say, hey, let's just call this a pivot if there's three higher lows to the left and the right. But I do explain continuation patterns. And this is a continuation pattern right there. Right? So if you even though there isn't three, maybe that is a tickle under that low. I don't know. It doesn't matter. Let's just assume for a moment it's not. Let's just say it's two. But a move out of a pullback toward minor support and a rising 20 MA, when you get a push like that, and a reversal bar that's immediately turned, whatever it looks like, it's a continuation pattern. It's the first reversal after an initial move. So it's a continuation pattern. Then we can add little tidbits of information that could add to its potency, if you will, okay? And that red bar, relatively large, not huge, but the green bar takes out the low. It's not even, takes out the low. That's a big plus. And then engulfs and turns up. So that's a continuation pattern. Common sense says, at this point, if it trades under there, there's a problem. And this is our major support. And this wouldn't be if that isn't a third higher low there. Right? we could measure it and see. But in reality, it doesn't really matter that much. From an educational point of view, we have to define things on a black and white level. So prices trade under here, it's a problem, no doubt. We don't need to measure anything to know that. And if it trades under here, this is going to be almost instantaneously hit to test it. It just would make sense historically that that's what it would do. And if it was to break decisively through here, the 50's waiting there, but this trend is broken at that point. Now, so what I'm explaining is just a step-by-step process of systematically, objectively saying what could go wrong. Right now, it's like everything's right, nothing wrong. Little bit of retracement, it's okay. Halfway down, it's okay. Goes down further and tails are down below the 50% mark, but the body's in the middle, it's okay. Close below this green bar is not okay. Something's wrong. Didn't break the trend yet. Goes down here, there's problems. Something seriously wrong. It's probably going down here. We're not there, but that's the plan on how to just say, is things okay here today? Because when you look at your 2-minute chart and it looks like it's crashing, come back to the daily and say, where is it in relation to that bar? No, you can say, it's okay. Maybe I'll buy the next W bottom. Anyway, little bar here. It's Friday. Dan shared with me some information, news that was in the newspaper about adjustments with Apple. He'll explain. In any event, there's some information to suggest that maybe today might be a little bit of a difficult day in the market. Maybe so. We shall see. Okay. Cues. Not much going on here. Pre-market kind of popped up, came back in again, trying to hold on. We go through the same analysis, but this is obviously a W pattern here. It's been lagging. It's not as strong as the spiders, and it's why we've been focused on the spiders. And of course, why we've been focused on the diamonds, which finally made a new all-time high. Right? This is what I wrote about. Well, maybe it was back here. I have to go find the date, the letter where I wrote it. And so beautiful consolidation, right? Coming down here. I remember on this, I think it was probably this day, in the middle of the day, it was a big, giant, ugly red bar. And it didn't look good. And I have to bring myself back to say, you know what, the day's not over. This is an uptrend. It is possible that this could turn around. And it did. And it was a beautiful pattern of a nice downward sloping angle of consolidation, bullish angle of consolidation into a rising 20 MA and into minor support. Textbook, perfect, beautiful pattern. Bottoming tail bar, taking out the lows. That's a picture of money. And here we go again. Up, right? Reversal. New all-time highs. So now we are in that part. Didn't want to switch to that. A little bit of a touch on the mouse that wasn't intended. Got stuff close together down there, different pages to look at. So now part of the plan was transports make new all-time highs. Already done that. Dow makes new all-time highs. Done that. Market internals reach extremes. Not there yet. But even if we get some kind of a corrective day today, right, could be next week. We still got this circus of news going on, in our government as to, who's not playing nice with who or who's calling who names. It's like kindergarten time there. So maybe things become wonderful and markets make an accelerated move higher. An amazing kind of a move, right? Maybe like the beginning of 2018. And prices become climactic, and our internals go into the red here. And then we're just going to sit back and wait for the ugly day. That's what we're going to do. And tops, bulls don't give it up so quick as the bears do. So we don't be so fast to hit that short sell button. Right? We give it a little bit of time. Sometimes it takes a few days, but we're going to have the recipe for a market correction at that time. So we'll see how this all shapes up next week. Does the rest of this theme come together with the idiots stepping up and buying calls, which of course they must be sitting on their wallets, just like saying, I won't do it this time, but they're going to do it. Right? They're going to pull out their wallets. They're going to go get the debit cards and they're going to buy those calls. And the Johnny come lately stocks are going to run up, and these things are going to push up into the red. And then something ugly is going to happen, right? Or, chopping up stuff, but we're going to know what's going on there. All right. Bonds down again, but stabilizing. And buyers starting to step up there after the break, greater than 100% retracement. That's what they do. And just what's the weekly look like on there? Downtrend, several bars down. And so now it's time to do this. It's time to say, hey, might you possibly be going really down the tubes here? Which would be okay, which would keep those banks doing well, right? Because those long-term interest rates keep going up and the Fed's relatively stable here. Maybe they're going to raise some more. They will. These interest rates keep going up. They're going to raise some more. But the spread between the Fed funds rate and these long-term rates are going to open up, and that's going to be good for financials. It's like free money for them. We continue to keep an eye on that. And we have gold. We do have that wide range bar there, but it hasn't been able to get off its back and topping tails. So no one's really interested in gold here just yet. But maybe another dive down to that next level, and where interest rates are going up, and then commodities will start to perk up. And that just might be the time where gold will really shine. When things are really where, all this talk about a great economy it's going to be like in everyone's face how great it is. And where commodities go higher and interest rates going higher, and then the competition for the stock market will become very competitive where interest rates are. And then the Fed will push it too far. And then we shall see if their inversion is really going to come into play. And that's far off from now. So sometime next year, we shall see if that scenario comes into play. On Fed days, George, I limit everything that I do, day trades in the morning, and then I just kind of sit back and, timidly and just say, okay, do whatever you're going to do. I'm scared. I'm kidding, but no, I just do back away. There's volatility at those times, but if you look at the day-to-day trading around that time, it's not like it used to be. It does get whippy at the time of the announcement for sure. And then you look at the daily chart and it's like, that was no big deal. Anyway, let Dan take over, go over the plays and gaps and so on.
All righty. Good morning, everyone. Yeah, well, let me just read to you a paragraph or two, because I was I was looking at the spider's gap down, and I'm like, what? The futures were up this morning. It says a stock shakeup looms in Friday's session. Get ready for a frenzied day of trading on Wall Street. We're going to have to contend with rebalancing of several major indexes. It's quad witching. The shuffling will affect 23 S&P 500 companies, combined 2.7 trillion. And another thing that's going on, they're reclassifying a bunch of stocks, like a lot of these FANG stocks, into the they're taking them out of technology and putting them into communication services. So that is going to require like XLK, the technology sector, because that's where those stocks belonged, right, in the ETF. It's going to force that ETF fund manager to sell these stocks that are leaving their portfolio and having to, rebalance in the other sector. So actually, I don't, Greg, can you tell us what the communication sector, communication services? It's not telecom. It says telecom transforms into a new communication services sector. So we got to, look at what's being affected, right? XLK and then the new one. But anyway, yeah, that I was looking at the gap down, and I'm like, why isn't this an arbitrage? Because